Do you know how your credit score affects your financial life? Let's take a moment to unravel this mystery. A credit score, in simple terms, is a numerical expression, a kind of financial report card, if you will, that's based on an analysis of your credit files. It's a snapshot that represents your creditworthiness, or, in other words, how likely you are to repay debts. This score is primarily drawn from your credit report, a thorough record of your past and current debts, payment history, and other related information. This data is typically sourced from credit bureaus, organizations that collect and maintain individual credit information. Imagine your credit score as the gatekeeper to your financial opportunities. It can impact everything from the interest rates you're offered to, whether you're approved for a loan or credit card. So remember, understanding your credit score is the first step towards financial freedom. So, you may be wondering, how is a credit score calculated? Well, let's take a look at the key ingredients that make up this financial recipe. The first and most significant one is your payment history. It's simple. If you pay your bills on time, you're golden. This factor alone accounts for 35% of your total score. Next up is the amount you owe, which makes up about 30%. It's not just about the raw numbers, but also the ratio of what you owe compared to your total available credit. The lower your credit utilization ratio, the better your score. The length of your credit history also plays its part, accounting for about 15% of the total score. This considers how long your accounts have been open and the activity on those accounts. So, the longer you've been responsibly managing your credit, the better. New credit is another ingredient, making up around 10% of your score. Applying for a lot of new credit in a short time can flag you as a potential risk and may lower your score. And finally, the types of credit used make up the remaining 10%. A mix of credit cards, retail accounts, installment loans, and mortgage loans is seen as a good thing, as it shows you can handle different types of credit. Now that you know how a credit score is calculated, it's time to understand its importance. Why does a 3-digit number hold so much power in our financial lives? It's a question many of us have asked, and the answer lies in the pervasive influence of credit scores. Credit scores are like the financial report cards that lenders, landlords, and sometimes even employers use to gauge your reliability. Let's say you're applying for a loan or a credit card. One of the first things the lender will do is look at your credit score to determine if you're a risk. A high score can mean the green light, while a low one can mean showing you the door. And it's not just about approvals. Your credit score also influences the terms of your loans and credit cards. Think of it like a seesaw. On one side, you have your credit score, and on the other side, you have the interest rates. As your credit score goes up, your interest rates can come down. This could mean saving thousands of dollars over the life of a loan. The same principle applies to rental applications. A good credit score can make you a more attractive tenant, which can make finding a place to live a much smoother process. In certain industries, employers might even check your credit score as part of the job application process. They view it as a measure of your responsibility and trustworthiness. Your credit score is more than just a number, it's your financial reputation. So, what are the key points to remember about credit scores? At its essence, a credit score is a numerical representation of your creditworthiness, a snapshot that lenders use to gauge if lending to you is a risk worth taking. It's calculated based on 5 major components: your payment history, the amount you owe, the length of your credit history, your credit mix, and new credit. Why does it matter, you ask? Well, a credit score is not just a number, it's a key that unlocks numerous financial opportunities. From securing a mortgage for your dream home to getting a loan for that shiny new car, your credit score can be your best ally or your worst enemy. That's why it's vital to regularly check your credit scores and work towards improving them if necessary. Cultivate good financial habits, pay your bills on time, and keep your credit utilization low. Remember, a good credit score can open doors to financial opportunities, so take good care of it.